Boom, boom. How's it going? How's it going? Yeah, welcome, welcome. It is I again, your boy, coming out live to you. And you thought we were not going to come out live. We are. We decided to come out live on a Monday. Hey, if you've never been here before, this is what we do all the time. My name is TJ Taurai Jack, and we are here talking about anything and everything around property. And like any other night, I bring you my boy Joe. Yeah, let's see whether Joe is around. Yeah, Joe is here. Joe, good morning. Good morning. How's it going?
Hey, TJ, right yourself, and hello to everyone.
Awesome stuff. Let's see this view or this view. Right. It looks like you got a different background, brother. Are you? Where are you?
Yeah, TJ, well, I'm coming here to you from Cape Town. We in Cape Town looking at some properties, and we had quite a nice drive today, having a look at
Yeah.
what's around here. Beautiful, beautiful town.
Yeah. Yeah. When I grow up, I'll have a house there. I don't want to stay there though.
Nah, I get what you're saying.
Yeah. Yeah.
Yeah,
When I grow up, I want to have a house in Cape Town, and when the season is nice,
yeah.
um, and I'll just go in and stay there for a couple of months, and be able to go and stay somewhere else, but not to stay there all the time. I think I might just lose the taste of the scenery when I stay there.
Exactly. Yeah, that's so true.
Yeah, yeah. But good morning to you. How are you doing, though?
No, it's doing very well. We had a very eventful day, and just keeping well, and we've got so many things to share with our viewers. So, I would like to, jump in and tell them a little bit about everything that's going around. What's
Yeah,
what's up, what's next. So we've got a lot of things in store for them.
yeah. Joe, you are the property fund. You're the property fund for M5 Property Addicts as a group, and in there we also have the Section 12J. But in particular, today you are in Cape Town, where the majority of our student accommodation is. And you're saying that you were there today. When did you arrive? Today? Yesterday?
No, well, I arrived yesterday.
Okay.
Had a nice flight. The weather is so good.
Yeah.
I just timed it perfectly. It seems like it. A few days ago, it was quite
Mm,
rainy and quite cold. So
yeah.
today was great. Great weather. We're on the lookout. We drove around, saw quite a bit of property.
Yeah.
So yeah, some good things, eh?
In your view, Joe, what is the difference between, so you know student accommodation very well in Coach, because you stay there specifically yourself. You're
Yeah.
a resident in Coach, but also, and you are managing the office for M5 Property Addicts. But what's the difference between property in Cape Town for student accommodation compared to Poch, in your view, with what you've seen so far?
Yeah, so much compared to Cape Town. Obviously, Cape Town has got the mountain, and you can't get past that fact. So
Yeah.
it doesn't matter where you are, you've got the view. That's quite exceptional. But yeah, just in Potchefstroom, we've got the Northwest University. We've got some pretty nice properties around the university. The nice thing about Cape Town is there's a lot of options. There's a lot of
Right.
properties around that. And so there's a lot of good locations, and that's the difference between Potch and Cape Town is, you've got various locations that you can add to the portfolio. It's such a, they are out there. Obviously, you just need to go and look for them and find them and purchase them for the fund. But obviously, I think the opportunity here is quite big. That's
And
a lot more variety to choose from.
right.
To really sum it up, yeah.
All right. Joe, for people that don't know what the Section 12J is, what is the Section 12J in a very grandmother language? What is the Section 12J?
Yeah, so Section 12J is a great government initiative that allows ordinary individuals to invest their hard-earned money into a fund. That's for the everyday Joe on the ground, and to really grow their monies in a fund that actually works for everyone. It's not just the super rich. This is a fund that you can invest from a small amount up to a large amount, and everyone still gets the same benefits. So it's an investment fund that really looks after individuals, that gives them a great return. People, it's all about the money. So we're getting those returns, and we pay it over to our investors. So you put money in, we do the work, and we pay out the returns to our investors. So we do the footwork for them, and they sit back and reap the benefits as well.
Amazing stuff. What is the minimum amount that investors can invest within the section object?
Yeah, so currently what we have is that we've set it up to be as low as 50,000 Rand. So there's not a lot of funds out there that can do that. In that case, in that scenario, we feel we quite privileged to actually have that option for our investors. Is that a minimum of 50,000 Rand, and you can be a part of a very large fund that that makes a mark in the property sector. So we can negotiate with the best of them, and it will only cost you 50,000 Rand to get in the fund.
Right. And Joe, I was speaking to a good doctor friend of mine today. Not really a friend of mine, but he's become now a friend. He's partnered up with us in different initiatives. For a person like him, he knows that he's on the top mark of the 45% in terms of his tax. A person like that, with that kind of a profession, Joe, how much returns should they be expecting if they are to invest, 500,000?
Yeah, so on 500,000, if a person has a 45% tax bracket, guys, it's not only your capital doing the work for you. You've got a nice bonus where SARS pays you back that 45% tax. And on a million, that's obviously the 225,000, which is exactly 45% of the 500K. So we're not just, the property is not just doing the work, but your tax money is doing the work for you as well. So,
yeah. Now, Joe, I just want us to speak to this scenario of this doctor friend of mine, and I know that we've got that loan option that is coming out, and he specifically said to me, TJ, I want to invest R1 million on this, so he wants to take the loan option. So what I'm going to do here, I am going to pull over to this here, the finance option, which is something. Can you see it there on your side, Joe?
Yeah, perfectly. You can see it.
Awesome stuff. And this loan option here, it's for people that don't have the full cash to invest with the fund at the moment as we speak, right?
Yeah. So this is for individuals that they can see the value, but they don't have all the money right now in their bank accounts. So what I can do is, so we've got this is actually a very special offering we're offering to investors, where you can look at other funds. Nobody's got something like this. This is very special, and we're only offering it to our investors. So what we're doing is that we're saying that, guys, you want to invest $1 million, but obviously not a lot of people's got $1 million in their bank accounts, But you know that next year some money is coming in, and the year after that some money is coming in. So let us rather split out and structure your payments, but you can still get the full tax benefit. Listen, you get a full tax benefit on R1 million. That's special. So even though you have not paid R1 million up front, you can still get that tax benefit of yours, and then that's what makes this quite special.
So what you're basically saying here, Joe, is you're saying that for people that know for a fact that within the next 2 to 3 years, they can get R1 million in their bank account in one way or the other. Basically, what they can do is that you are saying that at R1 million, they can invest, but you are going to, as a fund manager, you're going to give them the finance, but you want 25% of this money in your bank account for them not to lose out.
Yeah, absolutely. So they need to secure this deal, and for us to secure, you need to put a deposit in to secure it. But obviously, the 25, you still get a benefit of R1 million, not just by taxes, but also by dividends. So we acknowledge that you've only put in 25%, but we know you're going to put in the rest. So in good faith, we'll roll out your dividends until you've made your final payment. So you're actually earning money from not putting money down, quite a lot of money down. So it's quite a nice benefit as loan option.
But Joe, you are always saying that there is this tax bracket. This doctor friend of mine, he says that he's on 45% tax bracket at the moment. So in a nutshell, he's going to put in 250, which is 25% of the million.
Yeah.
Now his next payment is due on the 30th of September. But Joe, there's always this tax rebate that's going to come of 45% from SARS. Now, this tax rebate that's going to come from SARS, now it's a 45% on the 1 million. So do they get that tax rebate even though they haven't really paid for this 1 million? You are going to finance them. So will SARS give them this 450?
Yeah, SARS will give them the 450,000 because we let SARS know that this investor has taken up the shares. So in this scenario, he's getting his 450,000 rand back.
Nice.
And he didn't have to be out of pocket $1 million to do it. So he's getting the benefits without putting the full amount in. That's quite special.
That's cool. Now, Joe, if they for whatever reason, right, they're going to miss this out, right? For whatever reason, they're going to miss this out. What are they going to miss out on? What are the benefits that are they going to miss out by not taking this offer on the table? I mean, is there anything to talk about?
Yeah. So, guys, we need to realize that there's limited space available. So we can't do this for everyone. We can only do it for the first amount of money that comes into the fund. And yeah, so they're definitely going to miss out on being part of the fund in the sense that we've got all these special products where we structure the financing for them. They got a loan on the shares, and they're going to miss out on all those options, as well as we've got a great portfolio of properties that's performing well. And guys, you're going to lose out on those dividends, that rental income. If you don't invest, you're going to lose out on the rental income.
Joe, how much are they going to miss out on the return there for the dividends? You just mentioned dividends. For some people, they're like, well, I've got a job. I don't want to be investing. Or, I can invest with, I'm not going to say any company name, but how much are they going to miss out on here?
Yeah. So what we've done is we've got some of the highest dividends in the market. We're very proud to say 7.5%. It doesn't sound like a lot, but 7.5% on the numbers we're working with is a great return, and that's dividends. The rest of the fund stays in the return stays in the fund, and we buy additional property that gives even more dividends to our investors. So we're growing it year on year, and so they're going to get 7.5%, and then in 5 years, they're going to get the big number back, which is all the growth in their properties with the initial investment, and that's a big number they're looking for.
But now, Joe, you're saying that they're going to miss out on this dividends. So if they don't invest, they're going to miss out on that. But there's the upside as well from our previous discussion, where you have said to me, TJ, if the investors come in, they're going to get 7.5 because you have calculated the current 7.5 dividends on the current rental income. But if rent goes up next year, which we have seen it did go up in Cape Town with a 6.5%. Now, if it goes up, you as Mr. Fund Manager, you have also promised an upside on that. So will they miss on that, or how's it going to work?
Yeah, so we've been very conservative, and it takes time to get to know us. That we take a conservative approach, but we always perform. We always overperform, for our investors. So we didn't even include year-on-year rental increase for our investors, and we didn't even put into the whole packet, the capital appreciation. We take the property and we do a lot of renovations on it, and we increase the value for our investors. That's if you look at some other funds which we're not going to mention, the whole structure is based on capital appreciation. Guys, we're doing both. We're giving great returns, which is cash in your pocket, and we're giving capital appreciation. So and that's numbers we didn't. That's over and above the 7.5%. We're looking at numbers here that's around about 17% return, and that's even a conservative one as well. We've got some other nice models that shows quite a rainbow-colored picture.
Now, Joe, it gives me some excitement here because you're talking about a 7.5% year-on-year. That's what you're going to be getting, but depending on your tax bracket, you can come up all the way to around about 17%, up to 17%, if you're in a higher tax bracket. But this is something that a lot of people might not be getting, and this is where they're going to miss out on. The opportunity of investing this for your kids. They're going to miss out on that because the Section 12J is coming to an end, isn't it?
Yeah, so unfortunately, the SARS was paying so much rebates back to the investors that, that they're in a position right now where they say, guys, listen, sorry, we can't do it anymore after the June of next month. So we can't assist these guys anymore in that way. So so the opportunity is coming to an end, but it doesn't mean the fund comes to an end.
Right.
Yeah. So if you're clever about it and you can put a large investment in, that investment can be rolled over from year to year. Meaning that you'll get that additional tax benefit year on year, and that's what we like a lot of our investors to look at that option. Talk to your financial advisors, talk to your financial planners, and ask them if there's anything out there that compares to what we're currently giving. And guys, the truth is, if you have additional tax rebates year on year, it's quite special if you can do that.
Okay. So Joe, let me understand this. I want to understand it very simply put. If I'm investing cash, minimum investment is 50,000. So I've got my 50,000, boom, I can put in my investment. That secures me.
Yeah, it does.
However, you are also now saying that you can give me the financing plan. In this financing plan, what is the minimum? Is it also still 50,000?
Yeah, teacher, unfortunately, the amount of paperwork and work we have to do for our investors, we can only start it at 500,000. Yeah, but obviously at 500,000, it's quite a bit of money that we loaning or lending to our investors. So if you were to put in 50,000 as a normal investment, that's doable. But if you want to put in a minimum on a loan amount, meaning that we're going to give you 500,000 rand worth of shares in the fund, and then we only start at 500,000 because that's a benefit that you're going to pay off, and because you're paying it off, it's a little bit more expensive.
This good friend of mine who's a doctor said to me, TJ, look, I know that my practice is already performing. People are still getting sick, and I know that we're going to raise more money. And we're discussing general, 1 million. And eventually he was like, but TJ, hold on. It's the same amount of money if I put in 2.5. And 2.5 million, you can still finance 2.5 million?
Yeah, we can do 2.5 million for individuals. And we structure it in such a nice way that you can have that tax back for this year, and you can have tax back for year 2, and a portion of taxes back for year 3. So 2.5 million, it's shares that's issued to you in your name. You'll get that share certificate, even though you have paid only 10% of that amount. You still get that share certificate of 2.5 million. So we can do it for our investors, and we are doing it. And it's
Awesome.
great to have that share certificate is worth 2.5 million rand. But obviously, you still need to make your yearly payments as we agreed. So we can have those funds, so we can invest those funds for our investors, buy more properties, get more rental income, and grow the business.
Joe, I want to speak about, the people think that, or let me not say people think, but I want to say that from a security perspective, what can they lose out on the security here? Because I think there's an opportunity that they can lose out on here. And they can take their money to where there is no security. But here, what is the security that the people are going to be losing out if they don't invest in the Section 12 here?
Yeah. So the security is, what's nice about our fund is it's got an underlying asset. Guys, you can get in. It means you can physically phone TJ or myself up and say, you know what, take me to your property that you're going to buy with the investment, and we'll get in the vehicle and we'll drive there. We'll unlock the door. We'll walk through the property, and we can show you the kitchen, and we can show you the whole property. And it's transparent. The nice thing about this is transparent. If you were to invest in anything else, overseas markets, and it's just it's a digital footprint in cyberspace. This is a physical asset that you can touch.
Nice.
So they will be losing out on asset-backed or asset-underpinned investment, and that's quite a big thing for us. You need to see what you're buying, you need to feel what you're buying, and you need to take it in. It's good to see where your money goes. It gives you comfort, and that's what we want to give our investors.
I'm going to ask you the last question, but ladies and gentlemen, if you've got any questions at all that you want to ask here around the Section 12J, it's coming to a close. Today is the 24th of May. And I almost want to say, Joe, people have 30 days from now, because in June, the month is going to be ending on a Wednesday. But you can't be taking in paperwork on the 30th already, because you still need to process it. There's a back office. So I almost want to say, if you miss it on the 25th of January, you've missed it.
Yeah. I would like to say is some good advice would be, beg, borrow, steal, but the money that you invest, guys, you need to invest that money. If you don't invest it now, you will not have another opportunity like this. We've done everything to make it as easy as possible for you to invest. If you don't grab the opportunity with two hands, at the end of the day, you're gonna be in a situation a year from now where a friend of yours will be telling you about his investment that he made into our property fund, and how he got his taxes back, and now his investment is growing. And you don't want to be in a position where you hear all this good feedback, and your friend is just telling you about everything that's happening, and you're not a part of it. So do what you have to do. Get that investments coming in. Obviously we need to secure you need to pay your monies in for us to secure your place. Get in touch with us. The sooner you can, the better, but we'll assist you where you can.
30 days you've got to close off the fund, Joe. On the 30th of June, SARS dictates for you to go and report back. Our administrators are Rensel together with Grovest. They detect that you need to be closing off. You're taking in money, but it does not qualify for the Section 12J. That benefit is long gone, right? And my last point, before I go on to the questions here, I see there's some questions coming in. Ladies and gentlemen, bring them in. I'm going to ask Joe here for some questions to answer some of these questions. The last thing that I'm going to ask, your latest project, Joe, that you've put on this fund, right? What does that look like, that project there? That your latest project, what does it look like? If that's under the belt and you already have closed off?
Yeah, so we've done that nice big property there in Potch. It's a jewel. It's really quite something special. It's a large property. The nice thing about all these properties around the universities is once in a while you come along to a property that's got, it's got a big development opportunity. So that property alone is about 2,000 squares.
Wow.
Yeah, so it's the opportunity is there is to put some more units up, and so we've got that drawings to put some more units up. But what we've done with the existing building is we've renovated already. We've put in new electricals, we've put in new plumbing, we've done the floors, we've divided the rooms perfectly, we've put in new furniture, new beds, a new internet system, for the students. The only thing that's not new, in that property is the superstructure. It's we've upgraded almost everything there. So so it looks quite good. When we bought it, it was only housing about 5 students. Currently, we can do 17 easily. With a few adjustments, we can do, and also additional building work, we can bump it up to about another 34 students. So
wow.
So it's what we're good at is finding opportunities and growing it for our investors. So that's definitely one of them.
Right. I'm gonna speak like an uncle. This is Uncle TJ speaking to you. Right.
Okay.
There are not many opportunities that are going to come through where Section 12J is involved. Guys, if you're to miss this, don't say Uncle TJ didn't tell you. Right. We went out, we got it. The Section 12J it's functional. We have even gone out to get a financing option for you to come in and invest in it. Speak to Joe, speak to myself. In the comments, we are going to put in the comments how you can get through to us. So there is a link that you can click on that link. And in that link, all you need to do, there's an application form. It's an application form. I want to stress that not everyone is going to be accepted. For some people, it's going to be a no, right? That's the reality of life. You can't work with everyone. Even if you go to Absa, Standard Bank, right? They want to know where is your money coming from. If it's coming from other places that is not really out there, they're going to say, no, thank you. They might even call the police on you. So for us, there's an application form. We want to know who you are so that we can get through to you. We will not accept everyone else. Second thing is, I'm going to go to the questions. Someone says, yeah, Joe, for a person that take the payment plan, the rebate will only get once the 3 payments have been made. No,
definitely not. That's the beauty of the plan is you'll get your rebate before you've made the payments. So you can even, because you're going to use that rebate to pay off your shares, or you can use that
if you want.
If you want, obviously you're gonna use it for what you want to use it for. But you'll still get that rebate without you paying the full value of the shares.
When are they getting the rebate, Joe? I think that's the golden question here. The question that person is really asking is, when are they getting the rebate? When they finish payments, or let's talk about time. Today we are in May. So the tax season is going to open up when? February next year. So when do they get their money?
Yeah. So tax season for this year is it depends on if you, obviously we don't want to overcomplicate it, but you've got either you're working for a salary and you've got a pay slip, or you've got your own company and you need to pay provisional tax. So if you pay provisional tax, our recommendation is, if you've invested in our fund, pay as little as possible, because you will be in a position where you're going to get the majority of it back, and then and obviously that's going to happen for provisional tax and somebody that's got it as a normal pay as you earn taxpayer, and all your filings need to be in by end of Feb, guys. That's for everyone. Doesn't matter if you're a business owner or individual. And secondly, normally we get tax rebates coming through anything from July, where tax rebates comes through. Obviously, we've made it, that we've put, just to be safe, if it comes through a little bit late, August, September in there as well. But yeah, so we're expecting it in July, but obviously it's still up to government when they're going to issue their rebates.
Awesome stuff. Ladies and gentlemen, I am going to wrap up the conversation now with Joe. Joe, it's been great speaking to you. I know that you've been on the road today, looking out at different opportunities and things like that. So you should be a tired man. I am not going to hold you back, but enjoy Cape Town. And the last question that I might have is that where do you want to take students' accommodation? Where does the fund want to be? That's the question here. Right now, you're in Poch. We are in Cape Town and Durban. So where else do you want to go? Or, are you just going to focus on Cape Town, seeing that you are busy looking for stuff in Cape Town, by the way?
Yeah, so TJ, to answer that, there's students right around the world. There's a shortage of student accommodation everywhere. And if there's a shortage, definitely, there's always a big difference when it comes to quality. We're looking to do quality student accommodation in quality areas. So we're already in a lot of towns, and we're looking to expand in those towns. It's still, as I mentioned in the beginning of the conversation, lots of opportunities available. So Cape Town definitely, a few more Potch and Joburg and Durban, and you've even got some opportunities that's out of country, for student accommodation. So it's a model we understand, and that's why we're banking on it. So we're looking to take this fund. We're looking for 100 million at the end of the day. It sounds like a big number, guys. We'll get there. At the end of the day, that's our targets. To grow to there. Anybody who's part of that will be part of that big number. It's just we'll definitely grow to get there.
Amazing stuff. Joe, thanks a lot for being here with us. I don't see any other questions coming through. But ladies and gentlemen, if you've got any other further questions, what I'm going to do is that we will be looking out on the comments. Drop your comments in there. If you're serious about investing with us, click there where it says, it's a link that says Join M5 Fund. Join M5 Fund. Once you click on it, it's going to take you into another page where you can populate your credentials, how much you want to invest. Please answer the questions. Very importantly, to answer the questions. When you answer the questions, one of my team members is going to give you a call. Who knows? It might be me even. We'll give you a call and then we'll talk about your applications. If you're approved, great stuff. Then we'll go to the next step, which is bringing in the money, all the contracts that needs to be done. Joe, together with his team in the background, they are going to work for you to make sure that this thing is going to come to life. But we will see you on the next video.
Yeah, TJ, thank you. I really appreciate it.